Good afternoon, and thank you all for coming to Hysan Development's 2012 Annual Results Announcement Session. I'm Mark Tong from Hysan's Corporate Communications Department, and let me introduce our panel for the afternoon. Our Chairman, Ms. Irene Lee, our Deputy Chairman and Chief Executive Officer, Mr. Siu Chun Lau, and our Chief Financial Officer, Mr. Roger Howe. Now, we'll start today's session with a presentation from Mr. Howe, and we'll follow that with time to take some questions from the floor. As we have a live webcast today, we will also be taking questions online. Now, before that, though, I will invite Mr. Howe to talk about our achievements from 2012. Mr. Howe?
Thanks, Mark, and good afternoon, ladies and gentlemen. For new friends to Hysan, just one-page brief introductions of Hysan. Hysan has a portfolio, and we are one of the largest commercial landlords in Causeway Bay, primarily on the commercial side with some residential on mid-levels. For retail, basically we had three hubs, the Lee Garden hubs, which provides premium retail space for luxury high-end brands. The Lee Theatre Hub is home to stylish lifestyle shops and renowned restaurants. And Hysan Place marks a new shopping destinations with new international brands. And Lee Theatre Plaza renovation is to be completed in mid-2013. And as of the end of 2012 calendar year, our retail portfolio accounts for around 48% of our total investment properties value. For office, Hysan has a great office portfolio which offer a core locations with premium facilities. And Hysan Place will further strengthen Hysan's Grade A office positionings in the area. And at the end of 2012, office portfolios is approximately 38% of our total investment property. So much for the quick introductions. Now we are going into 2012 results. As you all can see from the announcement, our turnover, the top line, increased around 39%. On a like-to-like basis, excluding the implications from Hysan Place opening, is a 6.9% increase in top line. On the bottom line, on a recurring underlying basis, our profit increased 23.8%. Full-year dividends, as you can see from the announcement, we are proposing a second interim dividend in lieu of final dividend of 78 cents, making a total full-year dividend of 95 cents, an increase of around 20% from 2011. One final remark on that is with our balanced and more diversified retail and office portfolio, we were to achieve a steady performance for 2013, and further enhanced by the full-year contributions of Hysan Place. The next two pages is just some numbers summary, so I won't go into detail for that on this page, and then on the other, which is a 5-year trend of some of our key statistics. Next, I'm going to into each one of the portfolio. For our retail portfolio, turnover increased 58% year on year. On a like-for-like basis, it increased 9.5%, and we achieved a turnover rent of 104 million, which is about 8.3% of our retail turnover. The occupancy at the end of 2012 is 93% for the entire retail portfolio. On a like-for-like basis, excluding Hysan Place, the occupancy is 91%. The vacancy basically reflect the current renovations of part of the Lee Theatre Plaza. As you can see from the chart, in 2012, we had around 380 million revenue contributions from Hysan Place retail operations. For our retail portfolio, following the opening of Hysan Place retail operations in August, it basically completes our multi-year repositioning of our retail hubs And in that connection, we are also, as part of the district visions, promoting our district visions under the familiar but a new but familiar name of Lee Gardens, as you will all see in our buildings. Our retail portfolio in the entire Lee Gardens district is a multi-faceted but yet integrated shopping environment that combines significant street frontage with shopping malls of different characteristics, complemented by a vibrant streetscape. That also creates a very unique and diversified shopping and lifestyle experience, with 3 hubs anchoring corners of the Hysan retail triangle. As you all must be very familiar, that is our retail triangle. I won't go into detail of this. Next, I'm going to talk about each one of these 3 triangles. First of all, Hysan Place. The positioning for Hysan Place is hip and trendy, and with the opening in August last year, it basically served our 3 key objectives for that. First of all, it achieved our financial target we set for Hysan Place. Secondly, it also enhanced the entire area shopping experience. And finally, it successfully brought more shoppers, benefiting the entire Causeway Bay area. One of the numbers that I can share with you here, after the opening of all the anchor tenant shops in December 2012, we record a daily average of visitors of around 83,000, with peak days hitting over 100,000 visitors. Second part of second portfolio hubs is the Lee Gardens hub. As you know, that the position of that hubs is elegant and luxury premium retail. We have seen healthy retail sales contributed by both local shoppers as well as tourists. Overall, the tenants' retail sales for this hub see a growth of 7.7%, noting that a number of shops were under renovations in this period. And through our very focused, targeted marketing efforts, the tenant sales to our VIP Cup Avenue customers increased by 26% throughout 2012. And we also see a very strong demand for street front shops in this Lee Gardens hub. Finally, the third corner of our triangle, the Lee Theatre hub, and the position is stylish and chic, and with the most recent Lee Theatre Plaza rejuvenation as our last phase of the repositioning. All the renovated shop space for Lee Theatre Plaza have been committed and leased out, and that will include a flagship store for Uniqlo, as well as the biggest stores for Muji in Hong Kong. And we also introduced a new Korean fashion house called A-Land. Turning to our second sector, the office portfolio. For 2012, we have seen a 10.7% year-on-year increase on turnover, excluding Hysan Place office on a like-for-like basis. The increase in revenue is 5.2%. Occupancy at the end of the year overall is 91%, excluding Hysan Place office. The occupancy for the other part of the portfolio is 98%. We have seen positive rental reversions on the renewals and new lettings throughout 2012. We have seen an increase of 29% when compared to the rental of the existing lease. As of the end of 2012, 53% of the Hysan Place office space has been committed. For the office portfolio, in view of the limited supply of Grade A office space in competing core localities in the next 2 years, we shall continue to balance our occupancy with our tenant profile, with an aim to further enhance the positioning of the entire office portfolio. The top 4 industry groups of our office portfolio represent around 57% of our office tenant mix, namely insurance, professional and consulting, banking and finance, and finally, high-end retailers. Our overall tenant portfolio is balanced and without any single category takes up more than 20% of the total lettable area. Finally, to the residential portfolio, 2012, we have seen an increase in top-line turnover of around 4.8%. Occupancy at the end of the year is 92%. We've seen positive rental reversion on renewal for the portfolio as a whole, and the tenant retention rate remain healthy. Next is an update on our asset enhancement activities. For 2012, one of the key is the completion of Hysan Place, and you can see a number of characteristics here. Basically, Hysan Place increased our retail area, the retail GFA, by 50%. And we managed to secure major tenants like Apple, DFS, Gap, the Athlete Lifestyle Store, and Hollister. For office, it had top quality office space to strengthen our grey office positioning. And we will use it to capitalize on cost savings, relocation trend. And in terms of building specification, we have world-class standards, and we offer full harbor views from all office floors. And we have also achieved top sustainability accreditations. Again, as we announced earlier, we have been awarded the LEED Platinum certifications by the U.S. Green Building Council, and we are also the first LEED Platinum mixed-use complex in Greater China. And with the introductions of Hysan Place, we now have a more balanced portfolio with our retail contributing 24% of the total area, now increased to around 30%. Some of the information that I believe a number of you will be interested, that is the cap rate. Again, that is the indicative cap rates we obtain from our independent valuers. In summary, the cap rate has been suppressed by around 15 basis points for our office and retail portfolio, whereas for the residential, the cap rate has remained the same. On our financial positions, our gearing or net debt to equity ratio is 6.2%, further reduced from the 7.6% last year. Our interest cover is 16.8%, further increased from 12.3% last year. Our average finance cost is 2.7%, same as last year. And overall, the group debt maturity was about 5 years. We've been able to lengthen it from 4.2 years last year. In terms of fixed versus floating, we slightly increased our fixed rate ratio from 45% last year to 53%. In terms of our credit rating, Standard & Poor's has upgraded our credit rating from BBB to BBB plus towards the end of last year, whereas Moody's maintained their Baa1 investment grade rating. Finally, 2013 outlook. Hong Kong economy is expected to continue to be impacted by the conditions of global economic partners. We believe the private consumption should remain resilient. In this light, the performance of our balanced and more diversified retail and office portfolio expected to be steady and further supported by the full-year contributions from Hysan Place. Hysan well placed to continue to enhance and promote already significant retail and office hub in one of the most vibrant areas in Hong Kong. We have a strong foundation on which to build our ambition to establish the Lee Gardens as a district that inspires active participations and discovery in a close-knit, sustainable community of unparalleled energy. Next redevelopment target, we will have a combined development of Sunning Plaza and Sunning Court into a mixed-use office and retail complex. Planning underway and we expect the completion to be around 2018. So that basically concludes our brief presentations.
Thank you, Roger.